This is the strategy that I use on Forex. This is the strategy that I use on indices also. And I'm telling you now, whenever I'm looking to jump into anything, this is what I like to see. This is what I like to use. So today we're going to be talking about a strategy that I use that works on Forex and on indices. This is like one of my best setups that I'm about to share with you guys. So first I'm going to give you an example on the Forex pair, and then I'm going to give you an example on the indice pair. And yes, I was in both of these trades. I posted both of these trades on Instagram. So make sure you do follow me at MHU_FX. So this is GPUSD, as you can see in the top left over here, that's GU. And so I'm going to share with you guys why I was buying GPUSD and the strategy that I used to actually buy it, and where I took TP and all of that too. Got my line here that just shows you guys that this is a new week. And we've been dropping for the whole week. So right now I'm anticipating some kind of retracement, some kind of profit taking to take place from everyone who's selling at this point. They're going to be looking to jump out of their sales. So I'm looking for something that's going to turn price around. And I've just taken a little piece off the chart right now because we just exposed literally everything. But guys, I'm going to go ahead and break it down for you anyway. Okay, this is the 4th day in the week. This is Thursday right now. Price is trading beneath some lows. And I've told you guys every single time, and I'm not going to stop telling you guys. I'll tell you this in every single video if I have to. You don't want to be a seller beneath an old low. So when retail concept traders might be looking to sell from here, I'm looking to buy beneath an old low. I want to be a buyer when price is dropping. I don't necessarily want to be a buyer when price is already rising. It means that I'm late to the party. Okay, that's what this is what it means. We're trading beneath these old lows, and now this is where I anticipate some kind of reversal sign beneath these relative equal lows. As you can see, these are relative equal lows. You know there's going to be stop losses placed down here. So this is why they trade down into it. The people that are willing to do breakout selling are getting into sales, but they need someone to be on the other side and actually buy. And so this is where I'm looking to buy to then take price to the upside. But in order to do that, I need some kind of sign that tells me that price is ready to go to the upside, which is what I'm going to show you guys right now. So I'm on the 1 minute time frame now. We're trading beneath that low, and just to show you guys that low one more time, I don't know if I was going to show you guys actually. Let's go back to the 15 real quick. I'm going to just put this line here just to show you guys that this is the old low. Now I'm going to go back to the 1 minute time frame to show you guys. There we go. So now you can see where that old low is. We traded beneath that old low, and then we're starting to rally up. So in other words, price has produced a down close candle right now. So I can go up the time frame. I can go to the 5 minute time frame, maybe the 15 minute time frame, 10 minute time frame, and then this would be one candlestick. But on the 1 minute time frame, there's going to be multiple candlesticks. So this is why I'm not just looking at this candlestick at the very bottom. I'm looking at the whole push lower, So the moment they trade beyond it, over here, this is when I go into investigation mode to find out what is the best possible entry to jump in for a buy right now to catch this to the upside and attack these highs over here. I see these relative equal highs over here. They're close together, so that's why they're relative. I also see an up close candle over here, so this is another thing that you can target. But this up close candle is less likely to hold because of these relative equal highs, because we know there's going to be money above here and they would most likely want to draw up into that money. But it doesn't mean you have to hold to here. You can be very sensible and hold towards the up close candle, then take partials and let the rest of that trade see whether you can run those highs. Or if you're very confident, you'll be targeting higher prices. You'll be targeting price running above these highs, maybe running above this one too, filling in an imbalance and then dropping. I'm in a 1 minute time frame. You can look at where price leaves inefficiencies, where price leaves imbalances for an entry. And so when price returns back down to this imbalance, this is where most likely you should be looking to get your entry to go long. As you can see, no inefficiencies along the way up. Everything's been cleaned up apart from this imbalance over here. This is your entry area. Not only that, what you could do as well is some people like to enter at 50% of the down close candle, and it just happened to be so 50% lines up with this imbalance. Sometimes there is no imbalance. Sometimes the imbalance is a bit higher, sometimes the imbalance is a bit lower, but this one just happened to line up with 50%. So let's hit play real quick. This is where I was looking to enter near about this imbalance over here. So I was looking to take price to these equal highs and these highs over here too, but there's no harm in targeting these highs and closing out here. There's no harm in targeting the up close candle and then closing out here or taking partial there too. Because really and truly, price could reverse from here. Unless you have a very strong conviction that price is going to continue to run based off of a higher time frame analysis, right? Then really and truly, you should be just taking partials when price runs up into this institutional candle. And as you can see as well, look, they've also left inefficiencies within this up close candle over here. So this could be a very clean place for you to take your partial profits. I'm gonna hit play right now. So you can see, look, price runs the high, It comes back into the range and then pushes up again. At this point, people would have been doing breakout buying. People would have been thinking, okay, the trade has gone, I'm jumping in now. You understand? But you have to bear in mind, that's not my style of trading. Look at this. Look, when price breaks out of here, this high, on a 1 minute time frame, price is at a premium. You don't ideally want to be buying price when it's at a premium. You want to wait for it to drop into a discount. A discount is anything below 50%. That's what a discount is. As you can see right now, we traded beneath 50%. So price is at a discount. So this is when price is good to go. It does happen from here sometimes. If it does happen like that, I'm not bothered. I don't trade. I don't fuss. I don't stress. I buy it. I let it go. It's fine. Just let it do its thing. I look about the next setup. When price drops into a discount, that's when your boy gets active. So let me put that back real quick so you can see. And so this is where I enter. I enter roughly about 50% of this down close candle, which is also when price is filling in the imbalance. And you guys know my targets already. And now what I'm going to do, I'm just going to go to the 5 minute time frame. I'm going to hit play now on the 5 minute time frame, show you guys what happened. So we're breaking above highs now. So after you've entered, if price breaks back above this high, this is generally a good thing. And then if it takes out a high to the left, that gives you even more confidence. And I'm gonna hit play again. The reason I targeted high didn't equal highs, and we didn't even run it here, as you can see, we didn't run it here. So when this happens, when they don't run at the high, basically what's happening here is that they're building up the opinion for retail traders that this is going to be some type of strong resistance zone, and so it's time to get bearish. When they see this mad candle, this drop candle that engulfs other candles, this is normally like a setup for them to go short, and they'll put their stop loss maybe above these highs. They might put it above the previous high, which is this one over here too, and then they'll target to the downside. I'll hit play. Okay, cool. So just before this happens, right? Here, as you can see here, this is where they get a break and retest for those who wait for a break and retest. So price does a break and retest here. It breaks beneath a zone, comes up to retest it, drops again. This is more confirmation to go lower. Stop losses above the high. They absolutely annihilate those people who are jumping into sales from this high. And look at this. They also run out my high. Okay, so this is the high that I was targeting, around 76. I actually ended up closing it roughly about 80-ish. Okay, 80-ish over here. And so this is where I was done with the trade. Okay, a very beautiful trade. And look, when it comes to your stop loss, I nearly forgot to say, when it comes to your stop loss, the safest place to put your stop loss will be beneath the last down close candle. And that's the safest place. And that's because if they run that down close candle, this is where you got it wrong. Okay, you just have to accept it. You got it wrong. You're done. Okay, you just have to move on. So that was GPUSD. This was the strategy when it comes to the Forex pair. Remember, so when price has been dropping for a couple of days and you're trading beneath an old low, bear in mind where I took price, I didn't take it all. Where's my week? I didn't take it all. Let me go to the 50-minute time frame. Look at this. I didn't take price all the way up here, all the way to up here. I just ran out its current high. And just bear this in mind, guys. Look at this. If this is a low and this is our high and this is a new low, the target was the current high. I wanted a little bit more because when it comes to relative equal highs, they're always going to put their stop loss within 10 to 30 pips above this high. This high came in at 76. This high came in at 60. So that's 10 pips. So of course I'm going to target this high. Now I'm going to show you this strategy on the indices, specifically S&P 500. Now we are on the S&P 500. Once again, what's happened? We've been dropping for the majority of the week. We're trading beneath lows now, and I'm looking for price to start pulling up to the upside. I'm not looking for price to go all the way to the highs. I know there's major inefficiencies here. And price might want to clean this up, and there's relative equal highs here, and price might want to take that. I'm not trying to do the most, okay? I'm not trying to swing trade this thing. I'm trying to catch my piece of the pie, my portion, and be out of the market. And if there's anything left to squeeze, I'm going to let my runner try and squeeze in the rest. 50-minute time frame, I'm expecting some kind of reversal. We dropped beneath some old lows, and like I said, I don't want to be a seller beneath the old low. I want to be a buyer. So I'm going to be looking to buy price when price is dropping. It sounds weird because it's dangerous, but I'm looking to buy price when price is dropping. But I need my sign first. I need my reversal sign to go long. So let's break it down. I'm going to go down to the 1 minute time frame. Cool. So once again, we're trading beneath those lows. And just to show you that we are, once again, I'm going to put that line there so you guys know that we are trading beneath those lows. I'll put my line there. We're trading beneath the lows, as you can see. And now I'm looking to target some highs. So what did we get this time? So once again, so beneath these old lows, we have a push lower that runs out these lows over here. And then price trades through the high of this downward push. So now this has now become a down close candle over here. And all I'm waiting for is I'm looking to be active when price gets to roughly about 50% of the down close candle. I'm going to bring up my 52 and show you guys where that is now. So check this out. Boom. 50% of the down close candle aligns up here. Now, when it comes to this down close candle, I was in for a buy at these lows, but the entry I'm going to be showing you guys is the entry that I like best. And that's all about getting active at 50% of a down close candle, especially if it's at 50% of a down close candle beneath an old low or beneath a low. So you can see right here, 50% of this down close candles here, price trades through the high over there, and at 50% of the down close candle, this is where you need to be getting active. I actually did try to trade this on TradingView. When price did trade down to roughly about 50%, I did try to get active, and look, your boy completely flopped the whole TradingView thing. So basically, once again, like I said, it's so important to know the platform that you're using to trade. I don't trade off of TradingView, so I'm still getting used to certain aspects of it, but I was trying to get active here. I completely screwed it up. It was taking too long, so I ended up entering, you know, at a high that I didn't want to enter, and I entered the wrong units too, so it was completely a mess. And so I ended up canceling that trade, and I jumped in again where I wanted to with the correct information as well. So what I was doing is I was trying to risk 1% on TradingView. It just wouldn't adjust how I wanted it to. But when I saw price roughly about 50% where I actually wanted to enter, this is where I jumped in for a buy with the correct information on TradingView. But my real account, I was actually buying from these lows, and I was just trying to catch a TradingView entry to show you guys that you better be getting active when price is at 50% of a down close candle when you're trading beneath an old low and you run that to the money. So I will show you guys my executions afterwards. But anyway, let's continue. So the moment you jump in for your buy, roughly about 50% of the down close candle, then initially what you want to do is you want to target the high that price came from. So this is the high that price came from over here. And as you can see, look, once again, there's relative equal highs over here, relative equal highs. Well, technically it was like triple highs. And so what drew my eyes, because like I said, you always trade towards the money, is how they made this look like a very strong zone for retail concept traders. So when price came down, it bounced off. When it broke through, it came up, it rejected, came up, rejected, double top once again. So you know that's a very strong sell signal. So whenever price gets back up here again, you're going to be expecting some kind of drop if you're trading like retail concepts. But this, in my eyes, just drew me to this area because this is where the money is. If price runs out this high and if you're not taking partials along the way, you know that there's going to be stop losses within that 10 to 30 points of these highs over here. And so this is what drew my attention. There was money up here. I was looking to run out these highs, clean up some inefficiencies along here, and be done for the day. And don't forget, look, it was a new week. Let me go to the 5-minute time frame. It's a new week. It's a new week. That's a new week. I'm not looking to do the most and be holding it all the way to these highs. You know, like I said, you can always come back another day, look about another entry and get that. But I wasn't looking at that. I'm looking to just get my piece of the pie and be at the markets and be consistent with that. If you guys can get used to taking partials and keeping it moving, you will compound your account. Let me go ahead and hit play. I'm going to go to the 5-minute time frame to hit play. It'll be a lot quicker. So I'm hit play now. There you go. Price begins to move. As you can see, we're breaking above highs. If we break back above the high we just created on that 1-minute time frame right here, this is normally a good sign. And so this is what gives me even more confidence to hold this trade. And we're trading towards that money. If you wanted to be really safe, you could have closed off your trade here at this imbalance here. No harm done, you're good. But when there's money above, I like to trade towards the money. Yeah, let's hit play. There we go. Check this out. Boom. Price is traded above the triple highs or this very strong zone. Price is traded above that high now. When price trades right into this high, this is where I'm taking partials. I'm not messing around. I'm looking to be out the markets. It's Thursday. I'm trying to be done trading for the rest of the week. This is me. What I'm going to do now, I'm going to take it off the replay mode to show you guys the executions. So now you can see my executions. So like I said, this one was an absolute complete mess. Where it says buy one, I just completely scuffed the whole thing. But this one right here, I entered it in with the correct position, which was buying 23 units. And as you can see, where I took profit was up here. I'm going to go to the 1-minute time frame now to show you guys where I took my partials. There we go. 1-minute time frame. I've got everything up here. Price trades above this high a little bit, and this is where I'm comfortable to take partials. I ended up seeing it just a few minutes late, is what it is. So you get busy sometimes, and I actually end up taking partials right here. This is where I sold off roughly about 80% of the trade, and I had probably 5 more units left, and I moved my stops into profit. I believe I moved my stops beneath this low over here. And so this is where it stopped me out. If you ever decide to live trade, know the platform you're using. I know my platform that I use to live trade, that's MT4. I know it like that. But anyway, guys, that is the strategy. Price has been dropping for a number of days. and you're expecting some kind of retracement for the day. You want to be looking for that reversal side beneath an old low and then running the current high. And at the same time, if you look at your phone and you're happy with the profits, you can take that. So that is the strategy that works on Forex and on indices. Peace.